All right, let's talk about the rules for an individual who inherits an IRA from someone who is not their spouse. Because in 2019, Congress changed the rules for those who inherit IRAs or 401ks or 403bs from someone who is not their spouse, and they changed the distribution rules. And so you need to understand what the new distribution rules are for today and going forward. Now, these changes, these new rules only apply to individuals or families who inherit IRAs and 401ks after January 1st, 2020. And remember, because of COVID in 2020, everyone got a pass on the rules. But from 2021 and going forward, there are no more passes. Okay, so let's talk about what the rules were, and let's talk about what the rules are going to be, or what the rules are now. Now, the old rules, when you inherit an IRA, you had really two main things that you were allowed to do. You were able to do what they called the 5-year rule, which was you could take your IRA distribution over 5 years in 5 equal installments. Or you could do what they called the stretch provision, meaning you inherited an IRA from your dad and you were able to stretch that IRA or stretch the distributions from that IRA over your lifetime. Okay, now let me give you a little tidbit. If you inherit an IRA from a parent, okay, so let's say from your dad, you inherit the IRA and then you pass away, your beneficiaries have to completely drain that account immediately. Okay, they don't get any kind of stretch, they don't get any kind of rules, it's got to be done. Okay, but for inherited IRAs, you used to have 2 rules. Now you basically have 1 rule. It's called the 10-year rule, meaning if you inherit an IRA from a mom, a dad, an aunt, an uncle, you have to use, or you have to distribute that IRA in 10 years, meaning that account has got to be 0 in 10 years. Now the IRS doesn't care how you distribute your IRA, whether you do that over 10 years in equal installments, whether you do it every other year, whether you do it at one time. They just want that account drained and the taxes paid in 10 years, okay? So you need to be real careful if you're working or if you're on Social Security and Medicare when you're taking out your distributions from your inherited IRA. What is it going to do to my taxes? What is it going to do to my Medicare Part B premium? What is it going to do to my Social Security taxes? You need to be careful, and that's why I have this channel, the Your Financial EKG YouTube page. And if this is your first time watching, thank you so much for watching. Make sure you subscribe to the channel by clicking the button below. Smash the like button if you are enjoying this content or it's helpful in your retirement journey. And please leave your questions, your comments, and yes, your sarcastic remarks below. I do read them all and I respond accordingly. I also have a free booklet for you called The Roadmap to Retirement. It's in the comments section of this video. Click that. It's a free download and that will help you understand retirement income. So let's talk about, again, inherited IRAs. We had the old rules, now we have the new rules. So if you inherit an IRA or a 401k after the year January 1st of 2020, you have to follow the 10-year distribution. Now there are 3 exceptions to the rule. The first exception is to a special needs trust. So if you have an IRA and it goes into a special needs trust, the 10-year distribution rule does not apply, okay? Now, if you are disabled or chronically ill, so if you inherit an IRA from a parent, a grandparent, an aunt, an uncle, and you are disabled or chronically ill, the 10-year distribution rule does not apply. Or if you are a minor child of the decedent, meaning if I was a child, I was 15 years old, and my dad passed away and I inherited his IRA, the 10-year rule doesn't apply to me at 15. What does apply is I have to take a required minimum distribution. That means I have to take a small amount out of the IRA from the age 15 until I reached basically adulthood, 18 years old, whatever your state considers you as an adult, 18, 20, 21. We're in Florida, so it's 18, okay? So when I get to 18, now the 10-year distribution rule applies. So if you're a minor child of the decedent, the RMDs apply until you become 18 or, the age of adulthood, and then it's a 10-year distribution. Okay? Does that make sense? Now, taxes on inherited IRAs, ordinary income. So if you take money out of an inherited IRA and inherited 401k, 403b, that is considered ordinary income, just as if you were working. So if you are working or you're on Social Security or anywhere in between, you want to make sure that as you take money out of the inherited IRA, you're not pushing yourself into another bracket and you're doing appropriate tax planning for those distributions. Now, keep in mind, if you're taking money out of a Roth inherited IRA or a Roth 401k that you inherit, there are no taxes to the Roths, okay? Now, the 10% penalty, there is no 10% penalty for taking money out of an inherited IRA. If you have an IRA or a 401k and you take money out of it before the age 59 and a half, there's a 10% penalty to that. Now, there's some exceptions like disability or buying a first home or whatever, but if you inherit an IRA, if you're 27 and you take money out of it, there is no 10% penalty, just the taxes, okay? So I hope this has helped you understand the rules for inherited IRA distributions. If you have any questions, please feel free to reach out to me. All my information is below. Remember, there's a free download, the roadmap to retirement. Would love to help you with your tax planning, especially if you have inherited IRAs or 401ks, because what we want to make sure of is that we're the most tax efficient with that money. Hopefully you're having a great day. Thank you again for watching. Make sure to smash that like button. God bless. Bye-bye.